Another episode of Fintech Fridays. By now, you've all know my routine. I like to talk to cool people from cool companies about cool products, and we are going to do that today. A lot of times, though, I'm meeting people for the first time, and that's not the case here. Joining me today is Uday Devalla. Uday is the CTO at Sagent. Uday, welcome to my podcast.
Thank you, Brian. Thanks. Thanks for inviting me here. Nice to see you again. I know we go a long way, but it's good to be here.
Oh, it's always good to catch up. I had probably 2 years ago, I had some folks from Sagent on. I think twice, two different times now that I think about it.
Wow.
And a lot's changed since then. Obviously, the personnel and all that, but probably for this conversation, what I'm really interested in is diving into kind of where you guys are with the product and just get your general thoughts on the servicing space. But before we dig into that, let's start with just a little view of the landscape around mortgage servicing. It's there's still a dominant player, but I know the Sagent platform is making great traction. So maybe give us your view on the servicing landscape and kind of what you're focused on there at Sagent.
Yeah. So let's talk about the servicing landscape itself, right? So obviously, as you probably know, the private lenders or the private servicers or IMBs, as we call them, are growing actually right now in the industry. And because of the current state of the industry, there's a lot of these pools of MSRs that are coming for sale. And most of those are being acquired by these private IMBs, and we are happy, that the two of our largest customers are very aggressive in that, and that's so that obviously is good for Sagent. From an industry perspective, these IMBs are growing, pretty rapidly in the servicing space. That also is good for us. Actually, again, two of our largest customers are growing, right? We have to wait and see how the market plays out from an industry point of view, but certainly you can see consolidation from a servicing perspective, right? These guys, some of the bigger ones are getting bigger and bigger in terms of managing large portfolios and so on. So, but once the market turns, this year or next year, I don't know when, but we'll see how that plays out. But as of right now, I think from a Sagent perspective, it's been very, very good. So we have the tailwinds are behind us from a growth perspective and from a market point of view. Within Sagent itself, this we've always focused on creating the best platform that there is in the industry. Our platform today, LoanServe and the ecosystem around that, which is Care, which is our consumer platform, and Tempo, our default platform. They're all very, very good, best-in-class platforms. But Sagent's long-term view is that the servicing industry needs to change. It needs to modernize, right? I mean, you and I talked about that many, many times. There's a lot of innovation that happened in the origination side or digitization that happened on the origination side, but not much on the servicing side. And our goal is to change that. And that's kind of what we've been working on in the last, I would say, year and a half. And at the MBA this year, we announced Dara, which is our future state platform. It's a full end-to-end servicing platform. And the only one that in the industry that there's really no end-to-end servicing platform today. Everything from the moment that you start boarding loans all the way through the end of the default cycle, whether it is a foreclosure bankruptcy or a property price or EO, whatever that is, right? It's one single platform. We just announced at the MBA that launch went very well. We have very, very good traction in the market. And we are focused on delivering that platform to our first client, and our first client will be Mr. Cooper.
Nice.
And that's what we're working on getting that going for them and going live on that.
So let's dive in a little bit because I think a lot of people probably wrongly assume that a servicing platform is a single platform, when in reality, in most companies, and certainly from where I came from at Flagstar, it was componentized, right? And you had these component platforms that serve different use cases. So, can you just help the non-servicing expert that may be watching and listening just understand why this concept of a single platform is important?
Yeah, definitely. And your experience at Flagstar is no different than any other servicer in the industry today, right? And there are two core servicing systems in the market: LoanServe, which is our platform, and then the other platform that you used at MSP, right? And those platforms are core, basically accounting engines. That's kind of what they do. GL and accounting engines, they process payments and they do everything else. But servicing has evolved a lot more from accounting, right? It used to be just accounting 20, 30, 40 years ago. But now there's a lot more to servicing than just saying, okay, I'm going to collect payments and I'm going to do investor reporting and so on, right? There's a lot of default capabilities, consumer capabilities, right? Payments and real-time payments and so on and so forth. These systems are just not equipped to do that. So servicers are either custom building a lot of applications around these core platforms or buying applications from different vendors. So that creates a very complex ecosystem. So you have the root accounting system sitting in between, in the center, and everything built around that, right? Depending on who you look at, if we've talked to some servicers where, for instance, a loss mitigation specialist will use anywhere sometimes 5 to sometimes 10 to 12 systems to get the work done, because there's not one platform that does everything, right? So that's the current state of industry. And what Dara is going to change is it's going to essentially going to be one platform end to end for everything related to servicing.
And just again, to go a layer deeper, that one platform, then you have a single source, a true single source of truth, where all the data is always the most accurate and updated.
That's exactly right. So the whole platform is built on an end-to-end data model, right? It's a single source of truth, and it's all real time at that point, right? Because we're not talking about multiple systems. There's no data mapping back and forth. It's just one system, one data model, one data structure. So it's always real time. It's always it's up to date, and it's a single source of truth for the entire process end to end. So if a customer makes a payment online, that payment real time can be reflected across the entire servicing process. Even if that customer is in let's say a loss mitigation,
Right.
the loss mitigation process will get a real time update that there's a payment made, right?
So I think most people still think of servicing as you described it. It's really this accounting process. Payments are made, applied, and then investors are paid out, and all the stuff that has to happen, insurance, taxes, et cetera. But in this modern environment, and especially where MSR acquirers are thinking about how to maximize, optimize the value of that MSR and the consumer behind it, how much of what you guys think about in terms of the consumer experience is developed and built around engagement, but then identifying additional opportunities to serve that consumer on behalf of the investor or servicer?
Yeah, that's a big aspect of that, right? One is, of course, you cannot have consumer engagement unless it's modern digital experience, right? So because it has to be self-serve, only then you get engagement, right? If they're calling into your call center, then that's not really an engagement experience.
Right.
So that's one big aspect of our Dara platform is how do you make consumers do more self-serve across the whole spectrum of the activities that they need to do, right? And what that drives is engagement. That also drives, to your point, that it drives two other things, right? One, obviously, it will bring the cost down from a servicing perspective, because the more service consumers can do on their own, right, within the regulatory and compliance frameworks that the system is built around, the better it is from a cost perspective from the servicer point of view. The second one is the more engagement you have, the more opportunities you have to offer them other services, right? Again, services are now starting to broaden and offer other products other than just so mortgage products, right? You could offer an insurance, you could offer other things like that. And then the third aspect of that is retention, because eventually the market is going to change, and then you're going to come to an opportunity where it's a retention opportunity, right? So all of these are driven by a modern real-time consumer experience, and then we are building all of these capabilities on top of the base modern experience that we have.
Yeah, I think it's tough for people to maybe think about retention today when we're staring at the par rate in the high sevens, pushing 8% again. But to your point, we know we will see we'll probably see these little ebbs and flows that are going to happen from time to time over the next 2 to 3 years, and the ability to transact quickly is probably going to be the biggest driver of retention going forward. And it's not necessarily quickly from a loan processing perspective. I think it's the quickness is really at the point of thought for the consumer. How do you get them from thinking about or looking at or shopping, if you will, and into that retention refinance process? How are you guys thinking about like those early engagement opportunities, maybe when the rates aren't there yet, that are prepping that consumer to be ready for that market swing?
Yeah, there's multiple things in that, right? One obviously is there's a lot of analytics that goes into identifying, consumers, a propensity for purchase, propensity for refis, and so on and so forth, which a lot of people in the industry do to that today. So, we have a lot of data. We run these models, and then we can identify, those consumers that need engagement, and then partnership with you guys is going to enable that, drive that engagement for us, right? So we're always looking for things like that. We're always looking for things like, okay, how do we, because there are some things that are not really core to our platform. We would rather partner, right? Our partnership with you guys is a big value for us on that. So those are some of those things that we look for and say, okay, let's use those capabilities. Let's use that from an engagement perspective, and then let's use that as a trigger into pulling the consumer or driving the consumer towards where we want to drive them, which is eventually like, okay, hey, an application or an online request, right? So
yeah. I think I know the answer to this. I'm a borrower. I'm a consumer. I have my loan serviced by a large lender. And from a consumer perspective myself, I find that I'm on my auto pay, right? So it's not like I need to log in every month. So when you guys are thinking about the modern consumer experience, the modern digital consumer experience, and I know we talk about our relationship, our partnership, is it those other non-servicing related tools that you think about as a way to lever that consumer or leverage the ability to get that consumer to engage with the servicer brand more often?
that is correct. That's correct, right? Because as you said, there's a certain percentage of consumers who are on auto pay, right? They just set it up and they never log into the website again,
Right.
unless at the year end they want to get a tax statement or something
Yeah.
like that. Because again, you know this better than anybody else in the industry, right? Every single time the consumer is interacting with you is an opportunity for us to deepen that relationship, right?
That's right.
And you guys do that really well. So you probably are one of the best in the industry from that point of view, right? So those are all the things that we look for. We not only that they're coming to our platform for either okay, set up an auto pay, or hey, I have a question about escrows or things like that. Those are all opportunities for us to engage with the customer, but we're also looking for going out and engaging them with using experiences like you guys did. So
right. So you mentioned Mr. Cooper. They're obviously one of, if not the largest servicer in our industry, right?
They are the largest right now.
It's probably fair to say, since they are the largest in the industry, that they're the largest client of yours. Yep. So I don't want our audience to believe that they have to look like Mr. Cooper in order to benefit from a relationship with Sagent. So maybe talk a little bit about kind of the range of servicing customers that you all have, because you do have quite the range in terms of size, scales, and business models.
Yeah, 100%. Yeah. Obviously Mr. Cooper is the largest, right? But from there, we also have a number of about 50% of our customers are less than 500,000 loans in the portfolio.
Right.
So, and we have some customers who have 30,000 loans in the portfolio, right? Which is great. We have smaller institutions, smaller credit unions. We have banks. We have independents, different sizes, different scope. Some are specialty lenders, some are traditional Fannie Freddie lenders, are servicers. So we have the full spectrum of servicers as our clients, and then our platform supports all of them. And yes, everybody benefits from this experience, right? What we are talking about, it's obviously the scale is different, and how they're doing it is different. but everybody gets the same benefit from the consumer engagement perspective.
Which is huge when you think about it. If we describe one of those, 40, 50, 60,000 MSR clients, their consumer in effect is getting the same experience pretty much that the largest servicer in the country is
Absolutely,
getting,
100%. Yeah,
which is amazing.
yeah, yeah. And the servicer is getting the same value out of cost savings and the retention
Right.
capabilities and engagement capabilities. Yes, yes, they are.
I'd be remiss if I didn't talk about, AI and ML, and we didn't rehearse this, so I don't even know if there's an answer here. But I mean, obviously, you guys are probably thinking about different AI related or machine learning tools in the servicing context. What's the cool stuff that you guys are working on that would be interesting for our audience to know about?
Yeah, we've been working on this thing we've been working on AI and ML for a while, right? And obviously now it's a buzzword because of the Gen AI capabilities, and everybody thinks that now AI is nothing but Chat GPT, but that. We've been running predictive models on our platforms for almost 2.5 years right now. And we also announced at the MBA our Dara AI Docs, which is a doc classification and extraction and automation platform, which is one of the best in the industry, right? We actually, Mr. Cooper uses that today in production, running millions of pages through that, and that's based on AI, Vision AI, and then on top of the Vision AI, we have ML models that refine the data that comes out, and the ability of our Dara AI docs to recognize docs and extract data at a very, very high percentage. Right, so our quality levels are significantly higher than the competition in the industry today. So we use AI for that, and then we're also obviously looking at the Gen AI capability from a consumer engagement perspective, right? So we are starting to embed that into the platform, both from a consumer perspective as well as an operator point of view. Because I think one thing that most people don't, I think, look at is how Gen AI can actually help an operator get much more efficient than what they are from a learning curve point of view, or how do you navigate the system and how do you do things. So we're looking at that as well.
So we got a few minutes left. I'd like to just to get your vision for where you see servicing going. I think there's still going to be some consolidation, but it also feels like, and you kind of hit on this, is there's some opportunistic growth that's happening with smaller players. But like, what are the next big things you see that are on the landscape for our industry to think about, and as it relates to servicing, and specifically the technology that supports the servicing efforts?
Yeah, from a servicing landscape perspective, right? Again, the industry is driving the change that is happening, and that obviously we're all watching that, we're all reacting to that, right? We don't control that, whatever happens there. Regulations are always going to be there, right? There's more, especially on the hardship side. There are a lot more regulations coming on, a lot more plans, and those things we are reacting to them. As an industry today, and as a technology platform, we do that so that we can provide those solutions to our customers on time. Right? One thing is from the vision point of view for us is having an end-to-end platform which has intelligence, data, AI embedded into that, and can react to the nature of your interactions in a much real-time basis, I think is the future of servicing, right?
Yeah.
And that's kind of what we are betting our farm on, and that's kind of what we're delivering with Dara, right? And you, as you said, at Flagstar, you guys, you were a pretty big shop. You guys ran a servicing platform. The value of having a real-time data platform in the servicing is immense.
Right.
And we think that's the future, and that's where the industry needs to go. And that drives not only efficiencies on the servicing side, but we believe that drives consumer interaction and consumer engagement, because ultimately servicing and origination is a cycle, right? It's a loop that comes back. Everything that you do well in servicing comes back into the origination side and drives back into that, and that's kind of what we want to focus on.
And as an industry, we still have this relatively low retention rate across the industry. Now, your largest client happens to be best in class in that space. So I intuitively, I would believe that the learnings from how good they are, benefits others, and definitely benefits how you guys think about your platform and how it can drive kind of that re-engagement with consumers for your servicers.
That is correct.
Last question is, let's hope we never have another, pandemic type situation, which put a lot of stress on servicing platforms, right? With the regulatory requirements that came down with the CARES Act. But how much of that event, now that we're beyond it a little bit, really has informed the future development of your platform coming out of that?
It did quite a bit, right? One aspect of that is, how fast and how reactive should our systems be to what happens in the industry. But again, nobody wants another pandemic. Nobody wants such an event in our lives, right? But the market could change,
Yeah.
and we've seen in our lives, right? I mean, we go way back, right? We've seen where market can quickly change.
Right.
Because most of the time today, the current platforms can't react fast enough to change to that, right? Whether it's a regulatory change or a market change or some other change that we don't control. I think what the key insight for us was, how do you build a platform that can react fast and move fast and adapt fast, right? That's was what our learning is, and that's what we built into Dara. So we can move, any regulatory change or any other change that we need to react to, is how fast can you do that?
And I think for the audience that's listening that might be considering, a technology platform change, or maybe they're considering getting into, the servicing space, that's a huge point that can't be understated in the analysis when you're
That's right.
looking at a partner.
That's
for sure.
exactly it. Yeah.
Uday, this has been awesome. Anything you'd like to share before we let our audience get on with their day here?
No, it's been great seeing you, and I know your podcast is doing very well, and I'm very happy and privileged to be here, to be invited and talking to you and your audience. And we obviously love the partnership we have with you guys, and look forward to doing great things, actually. So
appreciate that, and we look forward to it as well. So everybody, if you want to reach out and learn more about Sagent, check out the Sagent website. Uday's out on LinkedIn. You can follow him there.
absolutely.
You're also doing the podcast circuit. You're like a celebrity on these podcasts. So they'll probably see you on another podcast as well. Uday, thank you so much for joining me. Everybody, thanks for tuning in. Come back in 2 weeks for our next episode of FinTech Fridays. Thank you.
All right. Take care. Thank you very much.